All right, here we go. First one of 2026. Okay, we're going to do best communities to invest in Calgary in 2026. We love doing this one every January. We talk about a ton of communities. What's coming up as that?
You know what? The reason why we love it is that we get the stats. Tim goes through the stats for like 2 weeks and analyzes everything and then tells us which communities are great, which ones are not, which ones performed, which ones outperformed, which is sometimes amazing to see. And then the other thing about the stats is that some of the communities aren't doing so well, but we know they're going to do well either because of infrastructure or building going on, like actually development. So there's a lot of other factors to keep an eye on. And that's what we love about it, Calgary Real Estate Wealth. We've been doing this for years. I mean, we were investing in Bowness when I used to say there was a lot of riffraff in Bowness and get in trouble. And now Bowness is doing really, really well. Another one we picked last year that we heavily invested in was Ogden. And Ogden, all of a sudden, people want to live there. So it's going to be a really exciting seminar, but happy New Year if we haven't seen you. As Tim said, this is our first seminar for 2026. I hope you're all doing well. We're super excited for this year. And we're starting off with best communities to invest in. If anybody has any questions throughout the presentation, just throw it in the chat. We will get to it. And we can answer really any question when it comes to communities or investing in real estate in Calgary.
Let's get started here. First of all, where do we find the hottest communities? How do we determine which ones are good, which ones are not so good? We don't look at, or we don't have an exhaustive list of, it needs to have this many people, you need to have this many services, you need to have this amount of bus routes. What we do is we look at the numbers of past sales and we look at certain things. We do look at infrastructure, we look at walkability scores, we look at crime statistics. We try to find the best communities within the price ranges that we're looking for our investors to choose these communities and then present them to you. And, generally people invest where they live. So someone living in the deep south down in Belmont is probably not going to buy a property way up north in Carrington, north of Stony Trail. So we're going to go through these sort of set, region by region within the city, south, north, east, west, and educate you guys on what we think makes some great communities to invest in Calgary. Okay, we'll start out with the Deep South. This is communities that are, right around the ring road on the south part of the city. South of that, maybe the one or two communities north of that as well.
And you know what? People love the Deep South. I find that either if people have grown up in Okotoks, then they're moving into the city, then they're comfortable with the South because they do a lot of stuff in the South already. So you're getting way more bang for your buck in the South. I recently had a client in December. We were looking more central, and then we were looking in Seton, Auburn Bay. He got an almost brand new house for the same price or for a much better price than he would have inner city. So it's also being developed. So you've got dog parks, you've got theaters, restaurants, the Y. You've got tons of stuff down there. So if either you don't mind the commute or you don't have a commute, if you work from home, then the South is very attractive.
Yeah, that's super cool. I know with the hospital down there, we can't say the new hospital anymore because it's been a number of years,
Yeah.
right? But that hospital for the first little while, it wasn't running at full occupancy. I mean, they weren't even using all of the floors. And I just heard a stat. Hopefully, everyone's staying healthy out there with the influenza that's going around. The hospitals are full right now. So, and in saying that, we were cautious to invest in there in the early days because there was no infrastructure. Yes, the hospital was there, but now it's pretty much built out. Like there's a Marriott hotel,
There's two hotels.
two hotels. Geez. And then you've got all the shopping there, and I know one of the first Chipotle's was down there, and I knew it was down there because my son would take the test, and I knew where it was going because he would have to put it into the GPS. But they've got these cool little restaurants and stuff like that that people want to be around. And I never really understood it till we started buying people houses around there. Some people just like new. They like everything to be new. And you don't get that in the city. Even on the west side, where the west side is pretty expensive to live up there, we don't have everything new up there. Like, we don't even have like we don't even have a Chipotle. So I'm just saying that because people want new and everything's new there. You go to the movies, it's new. You go to the library, it's new. You go work out, you're at a massive Y. So it's pretty cool.
Yeah, and if you look at the increases, the city of Calgary is 3.6 for 2025, but these communities here, none of them outperform the city. So because they're so far down south there, and there's more new builds going on, you're not seeing the price increases, not even at the city average yet. Once these communities are built out, then you're going to start seeing the increases come back up to what the city average is, and maybe even surpass it, because there's some really, really luxurious communities down there.
Mhm.
There's parts of Mahogany that have some very high-end homes. They've got the lake there, the lake at Auburn Bay. So there is some high-end homes there. You're going to see the average prices come up. And not only that, the new builds, what it costs to build a new home is more than what you're getting for the exact same home that's, say, 5, 10 years old, one community further north. So you're going to see those averages come up. But right now, you're not going to see that kind of growth that's not even hitting what the city is. And
Yeah.
that's just a fact of life because it's so far out.
Yeah, and we love being closer to the action. So, what do we mean by that? The last bungalow we bought in Auburn Bay, I think we picked up for 610. We actually renovated the basement suite to a legal suite. Um, you could walk to the hospital, you could walk to the shopping. Mackenzie Town's another community where if you're close to the little town center there, it just makes it that much more appealing. And what's funny about these deep south communities is once people are back from work, if they work downtown, they stay within their communities. They don't have to come to the city if they're not working in the city. The only things we watch out for, like a community like Copperfield, it's such a big community that if you're in the back of Copperfield, say close to the Stony Trail, you're away from everything else. There's other communities down there that you have to go through 15 roundabouts around the lake to get to the back of the community, right? So some of that sort of stuff can really tick off a tenant sometimes. And so it makes it a little bit harder. So if you are going to invest in these areas, once again, they have a proven track record. An area like Mackenzie Town or Mackenzie Lake, you know what? They're older communities now. I mean, Tim, back early in the early days, 2006, we were investing down
Yeah.
there. Now they're older communities, but you can get these older bungalows, renovate them, and get top rents because they're desirable neighborhoods. A community like Belmont, you just have to watch out. I know we've been studying, actually, you're on there today, looking at, we had a call from an investor that wants us to help him get our leasing
I think it's
division.
in Yorkville, which is right beside Belmont.
Okay, yeah, I'll rent out his basement suite. And anyway, we went on there and there was hundreds of basement suites for a week. So we're still sticking to staying away from newer areas because of the supply. There is a major problem with it. The developers can't even sell them, which means prices will dip further in newer communities. The only way we're going to buy you a property, especially for an investment, is if you're moving into it and you might have a family member that will be living downstairs or something like that. The other way we would do it is if it's walking distance to, restaurants, shops, or just amenities, basically.
Yeah. One final thing about the Deep South is communities like Mackenzie Town. What we're seeing is that a lot of the houses that had illegal suites, because of the City of Calgary Suite Incentive Program, a lot of people are legalizing those suites and then selling the properties. Our investors have picked up quite a few properties down there, bungalows and bi-levels that have had legal suites, and you're picking them up at a reasonable price. And because rents are so good down there in those communities like Mackenzie Town, they're cash flowing from day one. We're managing a number of those, not only on that side of McLeod Trail, but on the other side as well in Somerset
Mhm.
and those communities that are on the west side of McLeod Trail. So there are some good buys down there. If you're looking for a suited property, that's always a good place to get them.
Yeah, for sure.
Okay, the next one we're going to go to is south. This is communities that are straight south of downtown, go along the McLeod Trail Elbow Drive route, and these are the communities that we're going to talk about now.
And I really love some of these communities for flips and for, just adding value in general. So Fairview, Acadia, Haysboro, Ogden is on there. you're 15, 20 minutes tops from downtown. Big lots, you can typically pick up something in the 500s. I have a client right now, he's doing a flip in Fairview, picked it up at 530. And so he'll put 100, 120 into it. And after renovation is about 775. So you still have really good margins in these areas. They also rent well because they're not far from downtown.
Yeah, and some of these areas are good for long-term flips, meaning you could buy them now, just rent them out as is, and then add value later on. And the reason why I like that strategy is an area like Acadia or Haysboro, we've seen flips selling in there above 900,000. So when you see that, there's huge opportunity down the road. An area like Queensland, it got too expensive for us for a period of time there, and now prices have come down a little bit. So you might see some negatives here, but they're negative because they went so far up and now they're just coming back down. And why are they coming down? It's because people might choose to live a little bit closer into downtown than all the way down there, which it isn't even that far anymore.
Yeah, and I want to focus on the two at the bottom there, Ogden. As Ed spoke about it in the opening, about how it's very much in demand now. There's large lots, there's lots of renovations going on, lots of new infills going on in there, and a very reasonable entry price. You can see the average is still below 500,000. Now that's including condos and townhomes, but that's a very, very low entry price. And for the average investor out there, we're seeing huge success because the rents in Ogden are pretty much the same as they are in these other communities, Acadia, Fairview, Haysboro. So at a lower price, you can still attain the same rents. And then Woodbine, the final one on this graph, we really like that corner of the Southwest, Woodbine, Woodlands, because you're right next door to the new Taza development on the Indian Reserve. And that development is just getting bigger and bigger and bigger. It's going to be massive by the time it's finished. It's in 3 phases. There's one by the casino, one down by the Costco, and then another one which is going to be just south of West Hills Shopping Center, across Stony there. So there's all this massive retail and office development going on. You're going to need workers to supply the jobs there. And guess what? They're going to be renting from areas like Woodbine and Woodlands because it's just, a short jaunt to get to their job there.
Yeah, and Stony Trail on the west side there really helps. But yeah, some great areas. We love Woodbine. We always believe because you've got Fish Creek Park behind it. It's a little hidden gem. You see Canyon Meadows did really, really well. I mean, it's just going to keep going. Like you could see going down south along the train line, especially now going even further, right? So you got Somerset at the end, but prices, people want to live along that train line going south, and prices will continue to go up in those neighborhoods.
Yeah, so let's move on to the west communities. This is west of downtown, straight out to the city limits. It's actually the shortest distance to the city limits from downtown of any quadrant. So there's not as many communities out west because it is cut off by 101st there, just on the west side of Stony Trail, and it's quite a bit. You need it's a higher entry point to get in there. The prices are quite a bit higher. You'll notice Azad lives on that side of town, and me and Carly, we live in the poor part of town. So Azad can talk, or Carly will talk about this first.
Harley lives in the trendy part of town.
I think, land values in those areas have gone up substantially in the past few years. If you look at like the average price in Glendale, we're looking at $950,000. So
Yeah, that's crazy.
these areas, again, people love these areas because they're so close to downtown. You've got, it's adjacent to Clarny, Richmond. You've got a lot of families building in these areas because you still have the accessibility to downtown, but you have big lots and more of a family-oriented feel.
Yeah, and the rents are great on the west side. I know at the end of the day, like I think Jesse's on the call. We got him buying a townhouse this time, really last year, wasn't it, or the year
Year
before?
before.
Yeah, and you know what? He's getting great rents on a townhouse there, and they rent really, really good because people want to live up there. You've got amenities, you've got private schools. That's a big factor. And things happen in people's lives. I know I had a friend go through a divorce. She's got 2 kids, and She was looking to live in a townhouse and couldn't find anything under $2,400. And when she did find stuff, there was people living below her. So, I mean, people are going to pay for a good product. And even in the starter home price range in any of these communities, we know we were selling a starter home property in Coach Hill last year. And people will just pay a premium, especially if you go in either renovate it or you rent it out. You'll do well just by holding on to these properties. And once again, with the MLI Select program, these communities like the Glens, Westgate, like even Wildwood, the developers going in, building these fourplexes, eightplexes is just going to keep prices going crazy. So, you know what? If you're in that price point and you can still cash flow, holding on to a good piece of land on the west side, just means that you'll make more money down the road.
Yeah, and you see the huge increase in the average price for Coach Hill. Coach Hill is actually the oldest community west of Sarcee Trail. It was the first one built out there. You'll notice that's where the Hart House is. It was called Broadcast Hill back in the day. That's where they built the Olympic housing for the broadcasters. It has some older houses built in the 70s, 80 and 80s. That's why the prices are lower. There's some, starter homes. There's also some estate homes there. That's why you saw the huge price increase because the communities around them had gone up so fast, so much. You look at even Strathcona, where the average price is almost 900,000.
Yeah, that's great.
3, 4 years ago, we were buying starter homes in
No.
there for rental properties as standalone homes. There was no suites in them, and they were making great rental properties. Now we can't find anything for a good price to cash flow unless it is suited.
Yeah.
So Coach Hill is still it's a hidden gem up there for investors. If you can find something at a reasonable price, there's a lot of bungalows and buy levels. You can suite them and get double your rent. So, keep an eye on that if you're looking on the west side there. Otherwise, you really, really have to search hard for a cash flowing rental property on the west side there. Next one, Northwest. This is straight up Crowchild Trail, probably from downtown all the way up to the city limits.
So you see lots of bungalows in these areas, lots of suitable properties. Your entry level is higher again. But you are close to the hospital, you're close to U of C, so you're getting some really great renters there, close to the C train as well.
Yeah, and one thing you have to keep in mind if you're investing in these areas is you have to get creative with your cash flow. You might have to, because the university's up there, the hospital's up there, you may have to do student rentals or shared housing. I mean, you could get a bunch of nurses, we've done that before, into one property. A room these days up around these areas rent roughly for $1,000 per room. So you can make the numbers work. You just have to get creative. And we were talking to a colleague in the office today who was looking at investment properties in the higher price points. You know what? The magic sweet spot, if it's a suited property or the magic price point you want to not go above, is roughly 650,000. That is putting 20% down. So we want to stress that. And we always aim for our suited properties to produce roughly, if we can, around the $4,000 range. Now, rents have come down, so it'd be anywhere between $3,600 and $4,000, and then utilities above that. What does that look like? It would roughly be $2,300 down, and then $1,200 up, $1,300. So $2,300 up and $1,300 down. That's what that kind of looks like. And when you're in these good communities, and that's why looking at these averages, when you look at a place like Dalhousie, Ranchlands, they're still under the 650 range. So you can go in, get a starter home, and you could make these numbers work. Now, at the end of the day, we know when we went through that little COVID boom there that even these areas were out. Ranchlands was out of our price point at one stage, and now they're coming back a little bit. So there is plenty of room to make the numbers work.
Yeah, in the bottom community there, Boness, we've spoken about it, in quite a few seminars. We really, really like Boness for rental properties. If you just drive around the streets in there, there's so many infills going in, so many MLI Select fourplexes going in there. The developers have identified it. The lots are huge. The entry point to get in there is quite low. And there's a lot of older homes that, it's just land value. That price that you're paying is just land value. So knocking down that older home, putting up a new one for a developer it's nothing for them. We really like it because it's a massive community. There's still tons and tons of opportunity to get in there, to get a rental property, to suite a property, to even buy a legally suited property. So keep your eyes on Bone S. The price point is still within your grasp if you're an investor, and we really, really like it.
Yeah, and just one last thing on the Northwest. I remember showing one of Carly's listings here out of town, and I had to go show a sign call or something. And I remember asking the people, I think it was in Charleswood, it was across the road from the park. And I remember asking the people, they were from out of town, they were like from Ontario or something. And I'm like, oh, why Charleswood? And it was just because they had heard about Charleswood and they know about it, and they're happy to spend $1 million to live in there, right? So these communities, Silver Springs is another one. We've talked about Silver Springs many, many times, but Brentwood, Charleswood, Capitol Hill, all these kind of areas, Rosemont's gone through the roof as well. These blue chip areas, when they go up like this. Okay. So if you could get in, and you may have to get creative, you may have to add value to the property. So then, you force the appreciation, pull the equity out, and then you use that equity to help you cash flow on top of the rents that you're earning. Sometimes the rents won't, the cash flow won't come directly from the rent that you're achieving. But if you can make the numbers work by refinancing, pulling that money out, making that asset work by itself, and then holding onto it till the market improves, when they go up, man, they go up 100, 200,000. That's when you make the real money. So we just want to stress that about these areas, placing money into these areas will pay off in the long run.
Okay. The North communities. This is the community straight north of the downtown, going up 4th Street Northwest, going up Center Street, going up 6th, all the way to Nose Hill.
Yeah, so we're seeing good affordability in there. Lots of development as well. So a lot of the older, like 1914 houses are getting knocked over. Developers are coming in, putting up a duplex, but that's changing the feel of the whole street. So it's increasing values there.
Yeah, and we really like these communities that are just right up against Nose Hill, Thorncliffe, Huntington Hills, and to a certain extent Bennington Heights. Bennington Heights is a little bit different because there's a lot of tight housing in there. There's some, the streets are really tight, the houses are packed in there, the lots are a little smaller. So you really have to pick your streets and pick the properties in there so that they attract the right tenants. You're not going to attract tenants if you're on a cul-de-sac that's full of duplexes and there's 10,000 cars, nobody can park there. But communities like Thorncliffe and Huntington Hills, they still have the big lots, the 50-foot lots, the wide streets. They're very, very easily to convert into legal suites if you have a bungalow or bi-level. There's not a whole lot of 2 stories there, not a whole lot of split levels. Very, very attractive entry prices to get in there. You can see the average price in Huntington Hills is under 500,000. Thorncliffe is just over 500,000. So 2 very attractive communities for investors. Keep an eye on them in 2026 because we're expecting them to see some increases. They didn't see a whole lot of increases in 2025, but in 2026, because of their low price point now, we're going to see an increase.
Yeah, and then just one big draw card with these north communities. The airport isn't far. It's a major employment hub. You got good access now that they improved Deerfoot. You can get in and out. The congestion isn't as bad. So there's a lot of things going on. And you really, even if you are up in Huntington Hills, Bennington, you're really only 20-minute drive down to downtown. So you're not that far away. You're going to continue to see more people moving to these areas. And at the end of the day, you know what, you're not going to lose, and you're going to be able to rent out these properties for a good price.
Yeah. So let's move on to the far north communities. Again, these ones are about like north of Nose Hill, and they go right out to the farther ones, Carrington and Livingston, that are pretty much you can throw a rock and hit Airdrie. So let's talk about these ones, Carly.
Yeah, so these ones are tough. We've talked about it before. They're very far. They're very far and they're over congested. So there's been a lot of development up there in terms of residential development, not a whole lot of infrastructure. So you're not seeing things that we're seeing in the deep south. Like you're not seeing great restaurants, theaters, that kind of stuff. It's still a little ways away.
Yeah, that stuff is all in the plans. I mean, if you look at the community development plans for those far north communities, there is going to be a massive shopping area like Crowfoot, like West Hills. It's going to be up in Ambleton or something like that, quite a bit north of Stony Trail. It's going to come, but it's going to take years before it's developed, and then you're going to have the infrastructure around that.
Yeah, and you know what? Just watch out for the hail up there. I got to tell you, we've seen some crazy stuff. Tim and I, we have to put it out there. We were beside this property just a few weeks ago, and we couldn't believe the hail damage it had. So I don't know why that area just. Tim was trying to convince me. Okay, this is why the hail comes to the northwest. Is Tim's convinced me that the weather comes off through the mountains and it turns towards the north, and it just takes out those communities. I've never seen anything like it. So
Here's how's that. I don't know if you can see that. No, you can't see the. He's standing beside a townhouse, and the siding is just shredded. The vinyl siding is just shredded. So
yeah, I don't know what's going on. No, there are some communities. I mean, the newer communities, once again, you just have to go on Rent Faster. You'll see hundreds of these properties for rent. Prices are dropping like crazy. We've never seen anything like it. We were talking to a developer slash realtor in our office just the other day, 2 days ago, and Tim, he looked like he needed to go to hospital because he was so stressed. He was putting his clients into properties up there and now they're worth about $100,000 less. And I'm not lying that, you know what, we've been saying it, supply and demand matters, especially when it comes to investing in real estate. And there is just no need to go into these areas. Developers can't even sell their properties. And when we're saying $100,000 less, he was telling us you can get a suited brand new property up there, standalone, detached, for 800,000, and he was putting his clients into these types of properties closer to 950,000. So that's how much it's dropped. And when you're buying near newer, the problem is tenants are looking at what you're offering, an older product, and then they can go get newer, for the same price.
Mhm.
So what is the tenant going to go after?
yeah, and another issue up there is they're building whole streets of these properties with legal suites in the basement. Now, it's a
Oh, yeah.
great way to increase density, but it's a great way to also lower demand for your rental property. If you have one with a legal suite in it, well, if there's 10 more right beside you on the same street, you have a lot of competition. There's nothing unique about yours. They all look the same. The street looks the same. So basically, what's going to attract the tenants is your rental rate. So we would caution our clients to stay away from that for a number of years until the community is developed, until there's schools there, until there's shopping, the parks are developed, and there's maybe some employment centers around there. So to buy it, to be the first one in the community to buy this suite of property, maybe not advisable right now. Okay, the next one, the Northeast and the East communities. So it's straight out 17th Ave, east from downtown, and then all the way up to, say, Saddle Ridge, Terradale in the Northeast there.
And the Northeast tends to get a bad rep, but there are pockets of the Northeast. If you think of Dover, you have an entire street overlooking the entire city, which is one of the nicest streets, actually, when it comes to views. But typically, when it comes to investors, we tend to only want to put seasoned investors or people who are familiar with the Northeast into the Northeast in terms of rentals. You're typically as a whole, you're going to have more issues with renters just from the clientele.
Yeah, there are pockets definitely we just won't go into just because there are issues. There's safe injection sites, there's prostitution, there's crimes, and you hear about it on the news, and it's not changing. So there is no need, especially in a market like this where we have many options for the same amount you're spending in the Northeast. You could go into different areas and get a better property, get better choice of tenants. But there are a few select communities that we love, and it's especially along the C train line on 36. especially Whitehorn, even parts of Marlborough. I know sometimes Marlborough gets a bad rap sometimes, but there's some lovely streets in there. We've bought one last year for Dennis that he went in and actually renovated, put in a little suite. And I think the value after he did it came out with over $100,000 in after renovation value. So there are pockets. We know Erin Woods that we didn't know. We've got clients in there and they absolutely love it.
Yeah,
So and you get good
the
rents.
slogan is life's better in the woods.
Yeah, life's better in the woods. And what we didn't know is that there's pockets in the Northeast where there's communities that want to live there, like Filipino communities or Indian communities. And if you are able to rent into, or you have family or friends, and you can rent in those communities, it could be win-win all day long.
Yeah, so we're not telling people to stay away from the Northeast, but just be aware of what you're getting into, especially if you're going up that 17th Avenue corridor out east. There are issues out there. But if you go further north than that in the Northeast, like as I said, there's all kinds of different ethnic communities. It's really, really diverse. There's different restaurants and stuff like that. And it's some people just love living up there because of that diversity.
Yeah, and you have to remember when Calgary went through its boom, we're just talking just a little bit over a year ago. What happens is the Northwest gets so expensive that people that are just getting into the market and the starter home market, the Northeast becomes more attractive because it's affordable. So, you know what, we've seen prices go up, even places like Marlborough. We were seeing prices hit the 650 range in there, and now they're back down. So, you know what? If you buy correctly and you buy on a nice street where people are looking after their homes, and there's something, like the walking factor is good, you know what? You need a C train, it will pay off eventually. So you just got to pick the right properties up there.
And one thing about those, the communities like Marlborough, Temple, Whitehorn, Rundle, those communities, some of the original homeowners that bought back in the 70s, they're starting to sell, and you can get some good deals on original homes. And then all you need to do is a little renovation to bring it up to today's standards. We were actually in a house in Temple. Luke's parents are looking to sell because they've been there for years and years and years, and they're looking to downsize. They want to sell their home. And it's a very, very structurally sound home, but it's just a little dated. So an investor can go in there, do the BRRR, and pull some equity out, and then go again. So it's a good area to do that in. So that's it for the communities. What we're going to do now is talk about the surrounding towns around city. This is all around the city, the little towns that, well, they're not so little anymore, but the towns that our investors are investing in.
Yeah, so the small town feel, I feel like people are drawn to these communities because they do have a small town feel as opposed to being in the city. You're a little bit more rural. If we look at Okotoks in particular, there's a lack of rentals there. So if you're looking at investing right now, rentals are a great investment in Okotoks.
Yeah, you know what? These small areas, you just got to watch out. I'm looking at Airdrie there. There is an oversupply in Airdrie, which is bringing down prices. I mean, Tim, you bought one of our investors there just recently,
Oh, yeah.
and he got a steal of a deal. So prices will trend downwards in Airdrie because of the supply coming on. There's way too much. Chestermere, we're a bit concerned as well because going out to Chestermere, Belvedere, it's called.
Belmont,
No, Belvedere.
Belvedere, yeah.
Yeah, they're overbuilding in Belvedere right now, so that is putting pressure on the Chestermere market. That's why we're actually looking at offloading some properties out there for some clients. Cochrane, once again, they are building but more multifamily out in Cochrane. We were buying detached homes there, and even these areas, not really Chestermere, but not really Airdrie, but Cochrane and Okotoks, you can get a good suite of property under 600,000 and then get rents to cover your costs. Just talking quickly about Strathmere, Langdon, Diamond Valley, these like little satellite towns, they were doing really, really well, especially when rents went crazy here in Calgary. Tenants were happy to live 20 minutes, 30 minutes, an hour out of Calgary just to find affordable housing. I mean, that has all changed here in Calgary now with the MLI Select program. They've overbuilt, they've built purpose-built buildings. So that problem isn't going to come back. But these little areas, I was in Claresholm for a hockey tournament, and they had a little building boom going on there. I mean, I was staying at a hotel, and the guy who owned the hotel, he was telling me he was building all these duplexes, and he said they're all rented already. And I just couldn't believe it. And so these little towns that are 20, 30, 40 minutes out, Langdon went through a boom as well, will just continue, and people will want to live out there. And especially when you look at a place like Airdrie that, was really a smaller town. Now, like it's hustle and bustle,
Yeah, and
right?
it's only a matter of time before Airdrie and Calgary touch each other, and it will just be one big mega city. That smaller towns like Diamond Valley, Strathmore, you go north, Carstairs,
Yeah, yeah.
those communities are just far enough out that the prices are a little lower than
Mhm.
Calgary's, but it's still quite expensive to get in there as compared to 10 years ago. I mean, Diamond Valley, the average price is 565. That's only 40 grand below Calgary or 50 grand below Calgary, and it's quite a ways out. But if you can get there, you have the time to go out there to check on the property. It's a great place to own a rental because there is rental demand in these small towns.
Yeah.
Yeah. Okay, the next thing we're going to look at downtown condos. This is of interest, and we'll let Danielle start with this, and then as and I have a couple of things to say.
Carly.
Carly.
So condos are, I mean, they're a great entry point property, especially for people starting out because you're at a lower price point. They're great because I mean, it's an easy place to live. You don't have to shovel snow. You're not mowing grass. It's very maintenance free. I think the caution when it comes to condos is the building, right? You need to be in a well-run building with decent condo fees, because that can kill your cash flow if you're using that as a rental.
Yeah, I love this kind of slide here. Where, like, I got to be honest, I'm really concerned about downtown just with the supply coming on. We see the conversions, what do you call those conversions going on as commercial building to residential commercial conversions going on. Then you just see all these buildings coming online, and we know they're purpose-built rentals as well. So the market's going to be flooded for the next 3 to 5 years, which means prices aren't going to rebound unless we get a massive population boom, which I don't see a massive population boom coming. I see a steady growth over the next year at least, if we're talking about 2026. But for young people that have to get in, it's going to be super affordable to be able to buy. Once again, what Carly is saying is that you have to buy into the right building, make sure it's managed properly, because condo fees these days, we're seeing an average of condo fees up around $800 starting. Okay. And that scares me because that is almost a mortgage payment in its own. Okay. So and what's funny about this slide is Lower Mount Royal is the one that's really kept growing over the last year. And what that tells me is that people want to live in like little villages, right? Where you can walk to the coffee shop or go for dinner or grab, or whatever, go to the gym. There's a gym right next to Lower Mount Royal, right down the road from our office. And so little pockets like that, like in Marta Loop or Bankview has really, you walk down the hill and you're on 17th. But places like Kensington, we always talk about Kensington. We love it because everything's going on for Kensington. You even have a big train. Bridgeland's another one. And then the next one that we think is an up and coming, because we're hearing it from the kids out there, is Inglewood. And I don't know where they're going to build in Inglewood, but it is kind of starting, it's taking place. But it is becoming the next trendy place to live as well.
Yeah, and what really stands out, the final thing I'm going to say about this is the last column there, the year-over-year price decreases. You can see in every area in the downtown core, other than Lower Mount Royal, the prices decreased. We saw this coming probably at the end of last year, or sorry, the end of 2024, when we started to see the bottom fall out of the condo market. Prices are started fell all year long, and we believe these prices are going to continue to decrease in these downtown core for the foreseeable future because of what, as I just said, about the constant supply increases. And you compare that to condos all across Calgary, where the price increase was flat. So if you group all the condos together across Calgary, it was flat, meaning the downtown area shrunk, So all around Calgary, we saw little increases if you had a condo in, Chinook Park or Canyon Meadows, something like that. But condos are not the place to invest in for appreciation in the near future.
Mhm.
That's one thing we're going to say. You could get good cash flow if you choose right, but for appreciation, you're not going to see it in the short term.
Yeah, not for now.
Yeah. So high-end homes, the last segment of the market that we're going to talk about. Carly,
Yeah.
take it away.
So, I mean, people have been upgrading, right? So, because we're seeing prices in other segments come up, people are selling in those and then upgrading into the higher end homes. So, we are seeing movement in that area and price increases as well.
Yeah, one thing with high-end homes, what's happening is the cost of buildings to build these high-end homes is just through the roof. So you can't typically build today for the price you're going to pay for existing homes. So people are opting to, and it's funny because I was in Aspen last night picking up my daughter from a friend's place. There's actual homes that they must be only like 10 years old, but they got the skips, what do you call it, the renovation bins out the front. People, and I know this because I had friends just sell for a huge amount of money, and the person who is buying is going in there doing massive renovations. So people would rather buy existing and then go in there and just make it new again inside. So I think you're going to see, especially if interest rates going down, if you're thinking of upgrading, I guess that's what this slide is all about, getting into, a nicer home, you're going to see these prices continue upwards just because of interest rates and the cost to build the same product is above what's existing already.
Yeah, and what this slide demonstrates is it's sort of a general commentary on Calgary's economy. These houses are still moving. You look at the sales numbers on the left-hand side, these high-end homes, like well over $1 million, they're still moving, they're changing hands, which means Calgary's economy is doing quite well because the higher end houses are still moving. If those started to really slow down and we saw a decrease in those properties changing hands, we might start to get worried because as long as we have the people with money still investing within the city, we know that it's an attractive place to invest in because they want to live here. So it's a good sign for investors showing that, if the well-heeled people can have faith in the city of Calgary, it bodes well for the average investor out there who's just trying to buy an average rental property and rent to people.
Yeah.
So,
There is a question in the chat. Sean's just asking, how do you put a market rent on garage suite units in Inglewood? Tim and I were actually talking yesterday about building a garage suite. I was talking about putting a two-bedroom unit above a triple. A triple's doable, right?
yeah,
And we were estimating like $350,000 to build this thing. And the hard thing is right now, and I was telling Tim on the west side, I could build it and I'd probably get 1,700 in rent because it's walking distance to the C train. But if it's anywhere else, what are you getting? You're getting maybe 1,400 for a two-bedroom. That's two-bedroom,
Yeah.
right?
So I think these ones work really well as Airbnbs.
Yeah.
There's a couple in Richmond in my community, and they have the same thing. So it's a two-bedroom over top of a triple. They are rented consistently, and I think they go about 150 to 200 a night.
Wow.
Yeah.
Well, there you go,
'Cause it's
Sean.
kind of a cool, I mean, it's a different rental than if you were just to rent a two-bedroom condo.
Yeah.
And you have this kind of standalone property where you can probably have some outside space as well.
Yeah, we can tell you, Sean, that in Mackenzie Town, a two-bedroom garage suite would rent for about $1,100 right now.
Yeah.
Yeah.
Yeah. And, they come in different sizes and different configurations. Some of them will have their own dedicated garage spot in the garage. All of that affects your rent, but you're not going to get the same price as you would, a main floor or something like that. But it is a very good thing to add to your portfolio as long as you're not out of pocket too much money to build the thing. Okay, so just wrapping it up, looking at some of the trends in the Northwest, we're seeing Pretty stable demand for rentals. Lots of families like to live there. We've gone over a lot of the employment centers that are in the Northwest. On the West, it's actually premium rentals. If you're in a single family home rental or even the townhouses there, it's very, very premium. There's not a lot of inventory for rentals, like Azad was talking about, and you're going to get solid rental prices because of that limited supply. The North and Northeast, prices are softening. But you get good rental because people who, have family who have the same ethnicity as the people who live up there, they want to live within their community. They will rent from you. So rental demand is very, very strong in the Northeast. Southeast, it's balanced. It's pretty much the same. It's been all year. There's a growing sub-market in the smaller properties, the suites over the garages, the basement suites that are underneath all these new builds that are going out in the far south communities. And then the inner city, the prices are, the trend is that the rental market's going to be mixed, right? There's high rental activity, but there's also high vacancy. So downtown, you're going to have mixed results if you have a rental property down there. And then the final slide we're going to look at is we've been talking about these communities. Well, what makes a good rental property in a specific community, right?
Yeah, so you know what? This is what we specialize in. And we were just talking about Beddington, like there's pockets of Beddington we wouldn't go in just because it's too congested. You have mixed types of properties in there, you have half duplexes. I mean, we bought a few properties in Beddington last year, but one of them I know was across the road from a park. So there was all this parking, for the suite downstairs. And the funny thing is, the suite had 3 bedrooms downstairs, which is really rare. So, one property could yield maybe 2, 3 cars. Well, those cars have to park somewhere. The newer communities, there is nowhere to park. Like, we can't even believe how they're building them. And finishing up with this seminar tonight, we love being walking distance to some retail, either coffee shops or a gym or transit. All of that's going to help the rentability of these getting it rent.
Yeah.
Sure.
And so not number one here, but number 1B.
Oh yeah.
1 and 1B. So property condition. It's really, really coming into play these days because there's more rentals on the market. What we've found is properties in original condition or not really kept up by the landlord, they're having a tough time renting them out.
Yeah.
We've had to, rent out a few properties that the landlords have said they're going to do this renovation or that renovation, and they haven't.
Mhm.
And then we've had a tough time renting the property out because it's in original condition. It doesn't compare to those renovated properties down the street. So property condition is very, very important. You can see I've got it at 1B. It's very important, as well as the layout, right? And what it looks like inside, whether it's light, if it's a basement suite, whether the fixtures are modern and not really very dated and things like that. So that makes a good rental property in any community.
Yeah, and just affordability, you have to compare apples to apples. You have to be aggressive on your rental prices right now and look at what you're offering and how much it is and who's going to be able to afford it. And then moving on to tenant demographics, we know we were just renting a property in Ogden and the owners wanted to take the garage back. Once we took the garage off the rental ad for that property, that main floor suite, we weren't getting any calls. So we're like, no, you can't have the garage. We have to rent the house. And Ogden's that kind of community where you go in there and everybody has toys. They either have quads or snowmobiles or they're working on cars or they obviously have motorbikes, right? Like, so so some communities, you need to see what kind of clients you're going to get. Are they blue collar, white collar? What's going to be best suited for them? And then demand and market conditions. We actually want to really get you guys to understand this. It's all about supply and demand. Don't go anywhere, even if you're like, say, on the west side right now. I know near 45th Station, I think it is, they just built like this massive apartment building on the corner. I mean, a few doors down, well, you got 37th Street now, that apartment building after apartment building, right? So you wouldn't want a rental like near that because now you're competing against, if you have a main floor suite, you're competing against apartment buildings now that are brand new, roughly for the same price or a little bit more. So you really have to understand what's going on within your little pocket, and then work with that. Accessibility, transport links, definitely understand that. And there's new infrastructure going on. I know down where Tim lives near Lake Bonavista, that whole interchange going on there, that's going to make a world of difference coming in and out of going down south to Queensland, Deer
Yeah,
Run,
Deerfoot
Lake
and
Bunford,
Anderson Road.
all of that, so little things going on like that, understand what's going on within the infrastructure, and then community and neighborhood vibe. And that, once you have that vibe, I mean, we're talking about Lower Mount Royal. Lower Mount Royal has always had that vibe because 17th Ave is right there. I know when I was buying pre-construction back in the day, I hit Lower Mount Royal just because of that factor. And you have to look at, okay, well, what's going on in different communities? Um, like you look at Deer Run down there, Tim. There's that restaurant I went to near the old Walmart, and I was like, I couldn't even believe that restaurant was there. And so when you see, I sent Jesse there one time actually.
Yeah, down there, there's a new Crunch Fitness, and they really developed that mall.
Yeah, so when you
So,
see little things taking over like that, I remember we were talking about Northland Mall a few years
well, you
ago.
can see Northland Mall.
Yeah, you
Yeah,
go in there now. There's high rises in there, and they're building.
Jesse said
Yeah, I feel it. Yeah,
Pilots.
Philo's. And I was talking about it because I went for the prime rib there. The owner, he lives in California, and then he owns this restaurant Philo's. Like he lives in between the two places, and I was like, okay, this is pretty cool. And so when you see little things like that happening, you see things happening, and I mean the food scene in Calgary is just getting better and better. I mean, that trendy stuff, new people to Calgary, trendy people, or people that just want to be around it. Tenants, I would say, some of them like that stuff. And the tenants that like that stuff, they generally pay more for rent, right? And they'll generally be better tenants.
Yeah. So that concludes our best communities to invest in 2026. We hope you guys got a ton of information about that. If you want to delve any more into these numbers or you want to talk to us about it, just send us an email. We'll be happy to discuss any projections we got about 2026.
But we hope you liked tonight. It was a lot of information, a lot of numbers. And if you need to understand it a little bit more, or you would like a meeting with us, we are always down here at our office daily. We have free parking in the back, and we do these meetings all of the time. So
Thanks for joining us,
yeah,
and we'll see you guys in a couple of weeks for the next seminar.
yeah. Thanks for joining us, and see you then.